In an astonishing twist of fate, Lucid Motors, the trailblazer in luxury electric vehicles, finds itself grappling with an unforeseen challenge that threatens to ground its high-flying ambitions. Despite basking in the limelight for the Lucid Air's groundbreaking achievements and celebrating key production milestones, the company has hit a turbulent patch. A startling slump in demand for its electric marvels has emerged, casting a long shadow over Lucid's future and its bold plans for domination in the EV space. This decline in consumer interest comes as a rude awakening, particularly at a juncture when Lucid seemed poised to redefine luxury electric mobility. With its trajectory of rapid growth now in jeopardy, a cloud of uncertainty looms over the company's expansion efforts and the viability of its forward-looking strategies. Join us on a gripping exploration of Lucid Motors' current predicament. We'll delve into the factors contributing to this demand crisis, dissect the potential repercussions for Lucid's market position, and ponder the broader implications for the electric vehicle industry's competitive landscape. It's a journey through the highs and lows of innovation, ambition, and the harsh realities of market dynamics. Lucid's recent demand slowdown can be attributed to a confluence of factors, each playing a role in dampening consumer enthusiasm. Let's go deeper into it. The luxury EV market is becoming increasingly crowded, with established players like Tesla and Mercedes-Benz and new entrants like Rivian and Polestar vying for market share. This intense competition forces Lucid to differentiate itself and convince potential buyers that their offerings are superior. While Lucid boasts impressive technology and performance, established brands may hold an edge in brand recognition, establishing dealer networks, and broader service infrastructure. Lucid has faced challenges in ramping up production to meet its initial targets. In 2022, the company fell short of its production goals, delivering only a fraction of the planned vehicles. This shortfall could be due to various factors, including supply chain disruptions, lack of experienced workforce, or unforeseen technical hurdles. These delays can create frustration and uncertainty among potential buyers, leading them to consider alternative options.
Prices, and certainly with their supercharger network, to go buy an alternative.
Lucid's vehicles are positioned in the premium segment, with the Air sedan starting at over $80,000. While the car offers advanced features and technology, this price point might be a deterrent for some buyers, especially considering the growing number of compelling options in the market at various price ranges. Consumers might be hesitant to make such a significant investment, particularly in an uncertain economic climate. Although Lucid hasn't faced any major safety recalls, any negative press surrounding the company or its vehicles can cast a shadow and erode consumer confidence. Additionally, the relatively new brand name might lack the established reputation and trust associated with traditional automakers, leading to a wait-and-see approach from potential buyers. Lucid Motors is grappling with a substantial decline in demand for its Air sedan. From November to February, the company witnessed a notable drop in reservations, plummeting from over 34,000 to over 28,000. Moreover, its vehicle deliveries in the last quarter of the preceding year amounted to less than 2,000. This decline in reservations, coupled with lower than anticipated vehicle production, has sparked concerns regarding the company's demand trajectory. The CEO admitted that the conversion rate from reservations to actual orders was insufficient, underscoring the imperative to concentrate on boosting sales and enhancing customer awareness. Analysts have also voiced apprehensions regarding Lucid's potential market size and its roadmap to profitability, prompting some to adjust their stock ratings.
What do falling prices and not hitting your sales goals mean? They mean people are not buying the cars at the rate that you thought they would.
Struggling to escalate production, Lucid Motors has encountered financial strains, prompting plans to raise approximately $3 billion through a stock offering. The dwindling reservations in vehicle production, alongside the hurdles in scaling up production and stimulating demand, have collectively compounded the adverse effects of the demand slump on Lucid Motors. Comparison to other EV manufacturers. While Lucid faces production delays and hasn't achieved profitability yet, this slowdown is somewhat mirrored in the industry as a whole. However, compared to established players, Lucid's lower production volume and greater reliance on funding raise additional concerns about its long-term viability in the increasingly competitive EV market. Luxury electric car manufacturer Lucid is taking steps to tackle its demand issues by ramping up customer awareness and marketing initiatives. Facing a decline in reservations for its Air sedan and adjusting production accordingly, Lucid's CEO Peter Rawlinson underscores the importance of enhancing customer understanding while prioritizing sales efforts. Alongside, the company has rolled out over-the-air OTA software updates to swiftly address potential concerns, showcasing its technological agility. Despite encountering obstacles, Lucid appears poised to navigate through temporary setbacks and invest in future expansion, with a substantial reserve of liquidity projected to sustain operations until 2025. The fluctuating performance of Lucid's stock reflects a blend of broader industry trends and specific operational hurdles, notably the continued financial backing from Saudi Arabia's Public Investment Fund. Holding approximately 62% ownership in Lucid provides ongoing support to the company's endeavors. Lucid Motors has also put in effort to addressing the demand crisis by implementing several strategic measures. Price adjustments. Lucid reduced the price of the Air Pure by $5,000 and slashed prices on the Touring and Grand Touring versions by $12,400. Limited time offers. Lucid offers customers a $7,500 credit when buying an EV and provides up to $1,000 for charging equipment. Marketing efforts. Lucid focuses on amplifying customer awareness to improve sales. Reduced production targets. Lucid plans to build between 10,000 to 14,000 vehicles in 2023, rather than the originally anticipated volume. Despite these actions, Lucid faces ongoing challenges such as weak demand for EVs, high production costs, and competition from established brands like Tesla. The company's stock performance reflects these difficulties. Lucid maintains a close relationship with its primary investor, Saudi Arabia's Public Investment Fund, which supports the company financially.
I think it's profound, and I think here is the connection that there is an alignment with the Saudi Vision 2030.
According to a recent analysis, Lucid's stock price is forecasted to follow this trajectory. In 2024, it's expected to hover around $19, with a potential range spanning from $13 to $25. Moving into 2025, analysts predict an average price of $23, fluctuating between $16 and $31. By 2026, the anticipated average climbs to $29, with a low of $20 and a high of $39. Looking even further ahead, projections for 2030 foresee an average price of $72, with a fluctuation between $48 and $95. Lucid operates within a fiercely competitive EV market, alongside prominent players like Tesla, XPeng, NIO, Polestar, Oshkosh, Rivian, Li Auto, PACCAR, General Motors, and Ford. These rivals offer a diverse range of EVs, spanning luxury to mass-market segments, challenging Lucid's position in the industry. Lucid's growth strategy includes the introduction of new models such as the Gravity SUV, expansion into untapped markets like Europe and the Middle East, and the utilization of its cutting-edge EV technology. However, the company faces financial challenges marked by promising revenue growth juxtaposed with significant net losses. To secure its future success, Lucid must efficiently scale production, control expenses, and navigate the competitive terrain. Potential risks include production setbacks, fluctuating demand, concerns regarding high valuation, and intense market competition. Investors should closely monitor Lucid's operational performance, product launches, market expansion initiatives, technological advancements, and legal regulatory updates. These factors will undoubtedly influence Lucid's stock performance in the years to come. Let me take you through other factors that could affect Lucid's long-term growth within the electric vehicle market. Lucid faces the challenge of managing high battery and raw material costs, which could impact its ability to produce affordable electric vehicles while maintaining profits. Fluctuations in the economy may lead to a decrease in demand for luxury EVs, affecting Lucid's sales. Lucid contends with fierce competition from both established automakers and emerging EV startups, posing a significant obstacle to its growth. To stay ahead, Lucid must constantly innovate in design, efficiency, and features. Introducing new models like the Gravity SUV is crucial for Lucid to attract a wider range of customers. Lucid can unlock new sources of demand by entering untapped markets such as Europe and the Middle East. Maintaining adequate funding and liquidity is essential for Lucid to withstand market volatility and fuel growth initiatives. Efficiently scaling up production to meet demand is vital for building consumer and investor confidence. Lucid must navigate complex regulations on safety, emissions, and trade to operate legally in global markets. Delivering outstanding products and services is key for retaining existing customers and attracting new ones. These challenges will influence Lucid's growth trajectory in the long term, guiding investment decisions for its stock. Keeping track of how Lucid addresses these issues will help investors gauge its future potential accurately. Lucid operates in a highly competitive EV market, with key players like Tesla, XPeng, NIO, Polestar, Oshkosh, Rivian, Li Auto, PACCAR, General Motors, and Ford. Despite these challenges, Lucid has growth prospects, including launching new models like the Gravity SUV, expanding into new markets such as Europe and the Middle East, and leveraging its advanced EV technology. Nevertheless, Lucid encounters notable obstacles, including escalating material expenses, competitive pressures, and setbacks in production timelines. While projections suggest a positive trajectory for Lucid's stock prices in the foreseeable future, investors are advised to exercise prudence and remain vigilant about the dynamic EV market landscape. In essence, Lucid harbors considerable potential for the future, yet its trajectory hinges on its capacity to surmount production challenges, satisfy escalating consumer demand, and carve a distinctive niche in the bustling marketplace.